Hi, I'm Stephanie Link, and I work with Jim Cramer on Action Alerts Plus. And we're going to talk a little bit about energy because oil's up again today, and we just wanted to go through our strategy.
Right.
We own ConocoPhillips. We've been adding to it.
Right.
We own BP. We love it. We've been adding to it. But a couple of firms are now upgrading the drillers.
Yeah, the drillers are tougher just because you've got actual visible problems. You've got a rig count that's going down rather dramatically.
Right.
You have wholesale decisions by big natural gas companies last week, Devon, to drill less. You have Schlumberger saying point blank, other than Brazil, no one's really drilling. But you have an overall perception that if you cut drilling back, oil goes up, so therefore you have to drill more. Even in the most aggressive cycles, it's taken a year. This is now, people are predicting 6 months. What I do think's happened, and I think that if you have to step away, here's a pattern that you see over and over again. What the hedge funds were selling in the last 3 months is bouncing, and it really is kind of irrelevant what the fundamentals are. We're seeing that in Foster Wheeler today.
Right.
So what I would emphasize is that if you want to play the coiled spring, and once the hedge funds are done their the rebound, I think you'll make more money in Conoco than I think you'll make in Schlumberger over a longer period of time. Schlumberger clearly coiled spring, clearly going up. Transocean clearly going up. Technicians saying big breakout. But for Action Alerts, I think that what we have to be more concerned about is will Conoco go to 70 over time versus Schlumberger going to 60 and then going back to 40.
Right. I mean, the drillers, the service companies, they're very high beta.
Right.
And why we have more gravitated towards the integrateds because of the dividend.
Right.
And they are too also volatile, but less so. But they also have a good story to tell too.
I mean, the integrateds, you don't need to cut numbers, and they're selling at 3-4 times earnings.
Right.
The drillers are all selling already at high multiples again, and all the numbers are too high. So you have a situation where you're really just buying, 100% momentum, and 100% momentum was a destroyer of assets last year, and I don't think things have changed that much that it won't be again.
I think one thing that's interesting just to point out is it's a couple of weeks ago, no one thought that oil had bottomed or nat gas had bottomed. And now all of a sudden we have a couple of companies coming out, a couple of industry analysts coming out saying oil's bottomed, nat gas has bottomed. And that's just on the margin. That's something new, that has changed.
Right. Now, the good news is that there's a China thesis that we both agree with, and China can be an engine of buying oil. There was also a tremendous number of people, and I guess guys, commodity traders too, who when oil got to 33 said it was going to break to the 20s. That didn't happen. Frankly, if you're going to own an integrated, if we can stay between 35 and 45, we're going to make a lot of money because they're selling at 3 to 4 times earnings.
Right, and so on our radar list is Chevron, maybe even Oxy.
I'll pull back. Oxy's new for me. I have to, I like Oxy though.
I'm trying to convince you.
I know. You'll get me there.